What do you need to have to present your case to a bank to qualify for a business acquisition using an SBA 7A? If you're looking to acquire a business and you're seeking funding between $100,000 up to $5 million to make that happen, well, one of the best ways for you to do that is with an SBA 7A loan. Here are the minimum requirements and the documents that you'll need to get ready to submit your application to an SBA bank. And make sure you reach out to me because I work with over 25 preferred nationwide lenders. I charge no upfront fees or back-end fees to submit your file to my bank partners. And if my first bank can't do it, I'll make sure I take it to my second or even my third bank to get you a loan completed. So don't waste your time going from one bank to another, not knowing if it's the right bank. The bank is the lender, the government is the SBA. The government sets the requirements for the banks to follow, but the banks are able to follow their own internal guidelines. And as a result, you'll get 10 different stories from 10 different banks. So without further ado, what do you need to have to present your case to a bank to qualify for a business acquisition using an SBA 7A loan? Well, first of all, let's separate it into three major compartments. One is going to be the seller. Two is going to be you personally in terms of your finances. And then three is going to be you personally in terms of your credit. So the seller must have a business that's at least 3 years old that can show 3 full years business tax returns. Those tax returns have to show that the business has been profitable year over year. If we're into a mid part of the fourth year or at least 1/4 of the fourth year, they're also going to need to provide you with profit and loss statements and balance sheets for that incremental year. Now, if the business is carrying debt, you're going to need to get a debt schedule from the seller that shows all of the debts that the business carries. So 3 years business tax returns and a year-to-date profit and loss statement and a business debt schedule. You're also going to need a note from the seller or a letter of intent, something that shows the language of the sale. What are they offering and what are their terms? That's what you're going to need from the seller. For you, you need to be able to show a good personal credit score. No late payments, collections, or bankruptcies, especially in the last 3 years. Your credit score should be north of 700. Now, the government says the score could be a lot lower, but I've never seen an SBA bank close a loan with a score less than a 680 on a business acquisition. So the stronger your score is, the better. Part of what I'll do for you when you submit your file to me is I'll underwrite your credit, and if I can see there's anything we can do to strengthen your credit before we present your case to the bank, then I'll advise you on doing that. So this way, before we get started, we make sure your credit profile is as strong as can be. And then the bank is going to want to see your personal finances. They're going to want to see your personal tax returns. They're going to want to look at all of your assets. So they're going to have you fill out a document, which is the SBA personal financial statement. And you're going to list all of your assets. You're going to have to show them these tax returns. These are the three major things that they're going to look at. Now, you have to expect that the bank is going to require at least a 10% deposit into the loan. This is what they call an equity injection. So if you're looking for a loan, do the math and make sure you have that cash on hand to make that deposit into the loan. They also want to see that you have at least 6 up to 12 months of what's called post-closing liquidity. Post-closing liquidity are reserves that you have to be able to cover the monthly payment for at least 6 to 12 months, and that's up to the bank. Now, if you don't have income, if you don't have a job per se, then you do have to have income, whether it's passive income, whether it's any type of ongoing income that's coming in, or you have to have a large enough savings that can show that you're able to live without relying on the income from the new business, at least for the first 6 to 12 months. So make sure if you're employed, don't go quit your job before you get approved for this loan. Make sure you keep the job, keep the income flowing, because you're going to need to show that as you transition from an employee to a business owner with an SBA 7A loan. These are some of the basic requirements that we'll need to put together to present your case to the bank. Now, as you go into underwriting, if you own any other businesses or any other affiliations, they are going to be requesting tax returns for all of the other businesses and affiliations that you have. So do keep that in mind and get ready to show that. You're also going to need to prepare a business plan. The business plan has to show 3 years projections, and the first year has to be shown broken down monthly. A business plan and the projections without an explanation of how you came to the results of those numbers are just numbers floating in the air. And they mean nothing. You have to be able to explain those numbers, and those are called assumptions. The more you know your numbers, the stronger your case is and the more comfortable the bank feels with letting you borrow the money to start or to acquire the business. So an SBA 7A loan is a great way to acquire a business. The banks love business acquisitions as long as it's a profitable business year over year and you meet all these requirements that we've gone over. With that said, if this video was of value to you, please make sure you like, subscribe, and share. Make sure you reach out to me and schedule a free consult. I'll put a link in the description below for you to do that, along with a link to my website, SBA Experience, where you can watch more video content and learn more about all the criteria to qualify for an SBA 7A loan. This is Sebastian Boyer, the approved guy, signing out.